What's up, traders? In this video, we will be discussing how you can incorporate context-based decision making in your overall trading approach. So stay tuned. Now, before I take a trade in the markets, I always make it a point of trying to understand the context in which a particular trading opportunity has presented itself in. By doing this, I am essentially trying to identify and understand all of the associated risk that is attached to that particular trading opportunity. And by having that information, I will then be able to make a more informed decision as to whether or not that particular risk associated with the trade is worth taking. Now, it goes without saying that as a trader, you need to have a trading plan. When you step into the markets, you need to know how you identify your directional bias, how you identify areas to trade from, and you need to have an entry model to allow you to get involved in those key areas where you look to trade from. And if you think about it, when following a trading plan, you are essentially marking off what is and what isn't present in the market at that point in time, and the presence and absence of these particular factors will determine whether or not this is a valid trade to take based off of your entry criteria and based off your trading plan. However, the more experience you build up in the markets, the more you'll realize that oftentimes you shouldn't just mechanically execute a trade purely because of the fact that all of your criteria has been met. You need to be able to understand the context surrounding that particular trading opportunity in order for you to determine whether or not it's a worthwhile trade. A very simple example of this would be a valid trade setup appearing in the markets 5 minutes before an NFP news release. Now, unless you are someone that directly trades the NFP news release, if you see that valid trade setup going into a high volatility news event like the NFP, then the context of that trade setup is going to be a lot different compared to a time where it presents itself in normal, calm trading conditions. And that's what I'm going to try and show you guys in this video. So in order to explain this idea of incorporating context-based decision-making in your trading, we're going to be looking at AUD/USD. We're going to start off here on the 4-hour time frame. And as you can see, we are in a bullish market. We've recently had this bullish 4-hour break of structure. We have the location of our 4-hour strong low marked out in here. This is obviously the starting point of the impulsive phase, which generated that bullish 4-hour break of structure. And at this very moment in time, we can see that our internal structure is still trading bullish as it is facilitating that 4-hour impulsive phase. Price action is currently trading within this bullish 4-hour internal range. We are currently experiencing a 4-hour internal pullback. And because of this, we have yet to establish our new 4-hour week high. And the reason this is because our internal structure has not shifted bearish yet in order to signal the start of our 4-hour pullback and in order to signal the ending point of our 4-hour impulse. Now, within this most recent bullish 4-hour internal range, we have this 4-hour demand zone which sits at the extreme. And this 4-hour demand zone now offers us a potential pro-trend opportunity to trade from this area to target our 4-hour internal week high. And this would obviously allow us to trade in line with the current bullish 4-hour impulsive leg. And if we drop down to our 15-minute time frame very quickly, we can see that within that 4-hour demand zone that sits at the extreme of our 4-hour internal range, which is effectively our bullish 15-minute range, we have this refined 15-minute demand zone, which offers us a better risk-reward entry point. If we focus in on that particular area where this 15-minute refined demand zone originated from, we can see that it originated from this single bearish 15-minute candle before we had that nice push to the upside. There is just a smidge of imbalance that sits just above, and then we obviously also have this liquidity pool that sits above that area. So now we have a 4-hour demand area with a refined 15-minute demand zone contained within it that offers us a potential pro-trend opportunity to trade alongside the current bullish 15-minute trend. So now I have a buy opportunity in this area that is essentially regarded as being valid as defined by my trading plan. Once I have established that there is an opportunity present in here, I then want to go about establishing and understanding the context in which that particular opportunity has presented itself in. And that will look something like this. If we drop back out to our 4-hour time frame very quickly, what we can see is that this 4-hour demand zone sits fairly high within this bullish 4-hour impulsive phase. And so the higher you get in an impulsive phase, the more likely you are to see a pullback taking place. Therefore, because of the fact that this 4-hour demand zone sits so high in our current 4-hour impulse, and because of the fact that our 4-hour pullback is due, there is now the risk that trading from this area might only generate a short-term bullish reaction before price action rolls over to facilitate our 4-hour pullback. Now, this idea of potentially seeing just a short-term reaction before price action rolls over can be supported by the current price delivery that we are seeing here on our 15-minute time frame. We currently have our 15-minute internal structure trading bearish at this moment in time. We have our last bearish 15-minute internal breakout structure here. We have our 15-minute internal strong high in here. And as of yet, we have not seen the establishment of our new 15-minute internal week low. And this is because effectively our microstructure, the structure which is facilitating our internal impulse, is still trading bearish. As price action approaches this 4-hour demand zone, we could potentially see a scenario in which price action mitigates this area. Our microstructure shifts from a bearish market state to a bullish market state in order to facilitate a 15-minute internal impulse. And then we could very easily see a resumption of that current internal price action. And that would obviously now support the idea of potentially seeing just a short-term reaction in here. And then thirdly, if we look at our DXY very quickly, we can see that price action is currently interacting with our 4-hour strong high. At the time of recording this video, which is Thursday, the 3rd of October, 2024, my 4-hour structure here on the DXY is bearish because our last breakout structure was a bearish one in here. We had a very strong 4-hour pullback phase, which started on Monday, the 30th of September, 2024. So effectively, for the entirety of this week, we've had bullish pressure on the DXY. And this bullish pressure, which was facilitating the 4-hour pullback, has now brought price action in to interact with our 4-hour strong high. Now, if we are to see this 4-hour strong high violated, that would then mean that our 4-hour structure would shift from a bearish market state to a bullish market state. And this 4-hour structure shift would then effectively facilitate our daily pullback phase in here. Because at this current moment in time, our daily structure on the DXY is pointing bearish. We can see our internal structure pointing bearish as well, as it is facilitating that 4-hour impulse. And this internal structure shift in here, which is effectively our 4-hour structure shift, would then signal the start of our daily pullback phase. Now that daily pullback phase would be bullish. That would then mean that on our AUD/USD time frame here on the 4-hour time frame, we would then be anticipating bearish price action to take place because of that inverse correlation that exists between the DXY and pairs like AUD/USD, GBP/USD, and EUR/USD. And just by performing that very quick exercise, I now have more of an understanding of the risk associated with buys in here. Because according to my trading plan, this would essentially be a no-brainer trade. It's pro 4-hour, it's pro 15-minute, it's trading from a valid POI that is well priced, that sits at the extreme, that has the relevant liquidity and imbalance associated with the POI. But the context of our 4-hour time frame, the context of the inverse correlation that we have with the dxy now gives us another thing that we now want to consider in terms of the risk associated here. And having understood that risk, if we drop out to the 15-minute time frame very quickly again, and if I highlight the fact that our 15-minute internal structure is still pointing bearish at this current moment in time, instead of trading from this refined 15-minute demand or this 4-hour demand zone directly, what we could do instead is wait for price action to mitigate this area, wait for our internal structure to shift bullish before getting involved in a potential buy trade. Because by waiting for our internal structure to shift bullish, we then give ourselves the opportunity to take a little step back and wait to see how price interacts with this area, whether or not we're just going to be blowing through that area, whether or not we're just going to be having a 15-minute internal pullback before a resumption of this bearishness, or whether this is in fact going to be the POI that is going to facilitate our bullish 15-minute continuation, in which case, by waiting for our internal structure to shift bullish, we would then have more confirmation that that is indeed the case. So a very quick case study performed here on AUD/USD, showcasing how understanding the context of a trade opportunity will allow you to fully understand the associated risks attached to a particular trading opportunity and whether or not those risks are worth taking. Not only that, but by understanding the overall context, you are now able to also try and mitigate that associated risk by waiting for a confirmation entry, waiting to see a bit more price delivery, as opposed to simply trading from this 4-hour demand zone directly. For reference, I am recording this video on Thursday, the 3rd of October, 2024, roughly 2.5 hours after the New York Open. So definitely feel free to revisit this price action for yourself to have a look at what price action eventually ended up doing, and try and investigate whether or not this type of context-based approach can be beneficial in your trading. As always, I appreciate you guys so much for watching, and I'll speak to you in the next one.